Hi, and welcome to the latest edition of the JMI Wealth Monthly video series. Well, we're recording this in early May, so it's now more than 12 months that have gone under the bridge since that period of peak COVID despair in March last year. And as we've said in the last couple of video series, we're still seeing share markets perform pretty well over the period since I last spoke with you. We're seeing share markets actually hit all-time highs. The Dow Jones Industrial Index hitting an all-time high, the S&P 500 hitting an all-time high. We've even seen the Australian share market, that's the ASX 200, hitting an all-time high as well, and that's after a reasonably long period of underperformance. The only sore point, I suppose, at the moment is the New Zealand market. The NZX 50 index has underperformed so far this year compared to other markets, but that's after a long period of relative outperformance. And look, it's often said that share markets, when they go up, when they rally, that they climb the wall of worry, and when they come back down, they jump straight into the elevator shaft. Well, what we're seeing right now is share markets continuing to climb that wall of worry, as I refer to it as. And there are probably three major elements of concern or worry that share markets are dealing with at the moment. The first one is inflation and interest rates, and we've spoken about that before. The second one is valuations, and the third one is the fear of a resurgence of the virus in those places where they have rolled out vaccinations, and that fear that maybe the vaccinations won't deal with variants of the virus. Well, let's just talk about valuations first. We've just been through the first quarter earnings season in the US, and we had a couple of really blowout quarters, companies that did really well, companies like Apple and Google or Alphabet and Facebook as well. But what we've seen, they delivered great results, but the share prices didn't move a great deal. And that's because there's quite a lot of good news priced in to some of these share prices at the moment. So these companies need to deliver good earnings reports to actually justify where those valuations are. But in the environment that they're in, we would probably expect them to continue to deliver robust results. Now let's talk a little bit about interest rates and inflation, because we've got something pretty interesting happening out there at the moment. Right now, because the central banks around the world have artificially pushed official cash rates down, they've pushed interest rates down to try and help economies recover, what that's doing is we're starting to see this growth that I talked about. We're starting to see economic activity accelerating. What that's doing is it's bringing with it a little bit of inflation, though. We're starting to see economists project that inflation will rise over the course of 2021. Well, what we've got now in many places is we've actually got inflation above where interest rates are. And I'm going to throw in a little technical term now, that's called real interest rates. And when you're investing in a bond or in a term deposit, you really want to make sure that the return you're getting actually covers you for that, I suppose, that terrible eroding force of inflation. Unfortunately, around the world at the moment, inflation is above those interest rates. So we have what's called a negative real interest rate. Now, this can't carry on for a long period of time, unfortunately. The real question for investors and for financial advisors like ourselves is when and how do we return to a more normal environment where interest rates are above the rate of inflation. So ideally, from a share market point of view, what we'd like to see is we'd like to see interest rates return to a more normal, a more normal environment in an orderly fashion. What we don't want to see is short, sharp, sudden shocks to interest rates, because I think if interest rates return to a more normal level, a more normal historical level, then I think that's probably an environment in which share markets can continue to deliver constructive returns. But if we get short, sharp shocks to interest rates, that could be a different story. So what are we doing with portfolios at the moment in terms of portfolio positioning? Look, notwithstanding those worries, those concerns that I just talked about, and interest rates and inflation and valuations, we still think it's a constructive period for share market investing, for investing into equities. That's because amongst all this robust economic activity, there are certain companies out there that should do pretty well. Those cyclical companies that enjoy it when there's higher levels of activity, for instance, we should see good returns out of those sectors. And it is a fairly unfavourable environment for those assets that are connected to interest rates. Think about money market funds and fixed interest funds. So right now, from a portfolio point of view, we are favouring investment in those growth assets, things like, we call them equities, but things like shares. And we're probably moving the portfolios away a little bit from those fixed interest investments, although they still have an important role to play in portfolios. From the point of view of, say, looking at Australasia, we're favouring Australia at the moment over New Zealand because we think that cyclical change that we're seeing, those value companies coming to the fore, there's probably more opportunity in Australia than there is in New Zealand, and we're still favouring having a little overweight position in global equities. Look, but as ever, there's never a dull moment when it comes to the investing world, and as I said, it's been a pretty torrid year for investors in financial markets, and we'd like to think that over the next 12 months, some of that volatility might start to dissipate a little bit and we'll have a slightly more settled time. But you never know, volatility always seems to be lurking around the corner. But look, if you're thinking about investing into a portfolio of financial assets, why don't you give us a call or visit our website, jmiwealth.co.nz.